Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into the Wall Street Journal from Wednesday, September 10th, 2025. We're aiming to quickly pull out the key takeaways on economic data shifts, some major M&A activity, and the tech and policy developments you need to know about. Basically, what's shaping investor thinking right now.
Let's jump right in. On the economic front, the Bureau of Labor Statistics reported a pretty significant preliminary downward revision.
Downward revision? How big?
We're talking 911,000 fewer jobs for the 12 months ending March 2025.
911,000?
Wow. Yeah, it's the largest preliminary downward revision they've had since 2000. So it suggests the job market was, well, weaker than we initially thought.
And that weakness likely hits home for many. The Census Bureau also found that 2024 inflation basically wiped out wage gains for most Americans.
Exactly. Median household income, when you adjust for inflation, showed no statistically significant increase.
So running in place, essentially, even if the paycheck number went up.
That's the feeling for many, yes. Policy-wise, there were also a couple of important developments. Okay. A federal judge actually blocked President Trump's attempt to remove Fed Governor Lisa Cook from the board.
A direct test of Fed independence, then.
Precisely. And at the same time, the Supreme Court agreed to expedite its review of President Trump's global tariffs.
So clarity coming on presidential trade powers, potentially.
That's the expectation. It's a big one for economic authority.
Okay, let's pivot then. Markets and tech, what's moving?
Well, a huge deal in mining. Anglo American and Teck Resources agreed to merge.
The $53 billion one.
That's the one. Creating Anglo Teck, which will be a, top global copper producer.
Driven by EV demand, AI infrastructure.
Yeah.
All that copper need.
Exactly. Green tech, AI, it's critical. And sticking with industry, Mitsubishi Electric announced plans to buy Nozomi Networks.
U.S. cybersecurity firm, right? About $1 billion.
Correct. It signals a real strategic focus on securing operational technology, the OT side. Think industrial controls, critical infrastructure.
Makes sense. Now, AI always busy there. What's the latest?
Well, Mistral AI, the French startup, pulled in another $1.5 billion from ASML.
ASML, the chip equipment maker.
Yeah.
That's interesting. Puts Mistral's valuation around $14 billion now.
Right. It's a significant move, particularly with ASML investing. Shows a deep bet on European AI development and, well, securing future demand for their own machines.
Meanwhile, NVIDIA's seeing growth slow down a bit.
Yeah. Reports attribute it to ongoing supply chain issues, but also, maybe more fundamentally, long-term limits on electricity grid capacity for all that AI computing power.
Infrastructure constraints hitting the high flyers. And what about OpenAI?
There's scrutiny there. Their for-profit restructuring is facing political heat in California. Attorneys general are investigating.
Potentially putting that $19 billion in funding at risk.
It could, yes. Adds a layer of regulatory uncertainty.
And quickly, in fintech.
Robinhood launched an in-app social network. Lets users post and verify trades, trying to build more community.
Okay, lots to digest. Let's try to connect some dots. First commentary point. These revised job numbers. The stubborn inflation. How does this really influence the Fed's thinking on rates right now and market mood?
Well, the weaker job market, that 911,000 revision, it almost certainly increases the likelihood of Fed rate cuts. It suggests the economy might be softer than previously thought.
So a more cautious outlook then.
Definitely. It influences how investors are assessing risk, particularly in those sectors sensitive to interest rates. You'll likely see portfolio adjustments based on this.
Okay. Second point. The big copper merger, the huge AI investments like Mistral getting cash from ASML. What does this tell us about strategic priorities, and what are the maybe less obvious risks?
It clearly shows capital flowing towards essential materials for the energy transition and advanced tech like copper. And AI, well, it just keeps attracting massive sums.
But the risks, you mentioned NVIDIA's power grid issue.
Right. Beyond supply chains, you have these fundamental infrastructure limits like electricity. And as we see with OpenAI, there's also growing governance and regulatory risk. These are becoming really critical factors for investors in AI to watch.
Got it. Final commentary point. These legal and political fights, Fed independence, tariffs, the OpenAI probe, how do these reshape corporate governance and, maybe more broadly, investor confidence?
They underscore a regulatory environment that's increasingly complex and, frankly, politically charged.
Meaning companies need to be more adaptable.
Exactly. Agility and transparent governance become paramount to navigate these political risks and maintain trust, especially when billions in funding or major deals are involved.
So bringing it down to the ground level for our listeners, these revised job numbers, the inflation picture, It directly impacts household budgets,
Hmm.
job security, savings.
Absolutely. It creates a tangible sense of economic pressure for many people.
But at the same time, you have these tech advances constantly integrating into daily life. Things like potentially Apple's new iPhone Air or Robinhood's social trading feature.
Right. Technology keeps reshaping consumer experiences, personal finance management. It continues regardless of the broader economic shifts.
So here's the final thought then. As we see these fundamental economic numbers being adjusted and this intense dance between tech innovation and policy playing out, how well can we really anticipate, let alone adapt, to an economic future that just keeps getting redefined on the fly?